big question, why should people start investing in the mining space?
Yeah, so let's once again separate the exploration and the mining space. So we are focused on the exploration end. Those companies never generate cash flow. But if you look at, and I'm going to use the example of Toronto Venture Exchange, because that's the playground that we are involved in. If you look at a 52-week running high-low of any stock listed on the Toronto Venture Exchange, the great majority, well over 95% of those companies, will have a 52-week running low and high of at least a double. So it is incumbent on us to find those stocks when they are trading near their low and play that within a year. And the goal is to get a double within the year. You sell half your position and you take that cash, you've maintained your cash position, your base cash, and you go and you find another one and do it again. Meanwhile, you play the upside on that stock that you've just taken all your money off the table and have a zero cost basis. It's a trading methodology we call the power of two, because you are doubling your equity position at any given time. So if you do it twice, you have 2 times, you've reserved your cash. You do it 3 times, 4 times, so you keep increasing your ability to make money while maintaining your base cash position.
So, but is this theory, or is this has been put into practice?
No, this isn't theory at all. I've been doing this since 1992 successfully. I will admit it's easier in a bull market than it is in a bear market, because high tide floats all boats. But I made money last year. I made money the year before by picking the right stocks at the right time and employing this trading methodology. You will be successful. Now, we're not successful on all of the stocks, but we commonly get 2 baggers, 3 baggers, even 5 baggers out of this philosophy.
But what point are you coming in? What stage of the coming? It's exploration again, but that's a big space, huh? You can be coming in.
So it depends on the company, but we try to get early stage opportunities. And that does not mean the project is particularly early stage, but the company is. So once again, as contrarians, we want to find the unknown, unwanted, unloved, and undervalued. And there's lots of stocks that meet that criteria all the time, but the key to it is pick them when they're down, or when before the general market realizes that this is a good stock. And we've done that quite successfully.
Another thing in the exploration stage of investment is that, a lot of people with the same mentality and trading out of a stock at the same time, there's not the liquidity or volume there for the company to not be greatly affected if you've got a lot of people doing the same thing at the same time. It can paralyze a company. It can actually send a company into a recession. It's difficult with small trading volumes to actually do what you're talking about. So what type of companies are you looking for in terms of what market cap are they? What stage of exploration are they?
Well, I'll give you 2 examples right now. Our 2 most successful picks over the past year. One of them is listed on the New York American Exchange. It currently has a market cap of about $280 million US. We picked that stock at 65 cents a year ago. Well, it'll be 2 years in May. It currently trades at over $2.50 US. So there's a 4-bagger right there. And it is an advanced explorer / developer in copper space. Another example would be a small royalty company focused in Nevada that we picked 13 months ago at 9 cents, Canadian market cap of about $7 million. 2 weeks ago, it hit a multi-year high of 20 cents. So there's your double. When that stock hit 19 cents, my subscribers, if they follow the trading methodology, and it's up to them to do that, would have sold half their position, taken all their money off the table. That still is a 18, 19 cent stock, and you play it for the upside.
You're not going to tell us all about the ones that didn't go well.
I can tell you one. Sure, I'll tell you one that.
Please do, but please tell me why. As in, what went wrong that shouldn't?
Yeah, absolutely. So I've never been enamored with zinc space. I've avoided zinc companies. About 2.5 years ago, in the fall of 2016, I was presented with a zinc opportunity in Ireland. A startup junior, people I'd worked with before, had bought out a major mining company there on an exploration program. I thought that zinc was going to go on a great run. Price-wise, we were absolutely right, but that did not transfer to junior equity space. So we picked this stock. It did not perform, and it's still hasn't performed. To the management's credit, they've realized that zinc is, the bloom came off that rose very quickly, even though zinc price today is about $1.30, which is not that far off the all-time high. But that company now has found a reconnaissance exploration play in copper space in South America. So there's still hope for that company, but they've made a pivot where they've decided, well, we're going to keep the zinc play, keep working on it, but we need something in a different commodity, and they picked copper for good reason.
So I mean, that's a great example. I think I did something similar, but I moved my money out into lithium. So just help investors understand, because I'm trying to help people understand that why there's a need for mining, because I think it's something which was very popular. People have been distracted with, even mining investors have been distracted in the last couple of years. But, the younger investors thinking of coming into this are looking at technology, they're looking at healthcare, they're looking at other things other than mining. There's a reputational component to this, which is, the sheen has come off. So why do you think is still a relevant investment class?
Well, number one, everything we use in this society is either grown or mined. So, I'm looking at your background there, and I can see just about everything that's from your wallboard to your glasses. Those components come from mining. So mining is essential for modern day society. It was essential for caveman society when they first started using tools. Those elements, copper, iron, were all extracted from the earth. So mining is essential. If you look at what's happened in the markets over the last 5 years, the only space that has not really performed is mining space. So miners are still undervalued. Exploration companies are sorely undervalued from their peaks in 2011, 2012. So for a contrarian such as I am, it looks like a good time to get involved in the exploration and mining space. Look at the cryptocurrency bubble. Look at the marijuana bubble. I don't know any cryptocurrencies that have performed well over the last year and a half. Some portions, at least in North America, of marijuana space have gone exponential, but when things go exponential, they go parabolic. They come back down on the other side. Look at, for example, lithium price recently. So what you want to do is you want to find those sectors that have the potential to increase in valuation and get in early before they approach that exponential rise sort of space. That's when you need to be selling.